What is up, Eagle Investors? Welcome to another episode of Eagle Investors Market Recap. And in this episode, I'll be going over fiscal stimulus measures, monetary policy, economic data, US politics, commodities, and other things that I saw over the week. In terms of market performance, the S&P 500 is down 2.05% for the week, and for the year, it's up 1.78%. Now, this week was crazy for the markets. We saw a downtrend over the last 3 days, trading days for the S&P 500. The main reason why we're seeing this is we saw a parabolic motion up for the markets, but now we're seeing a rotation out of growth to value, with with growth making a significant portion of the indices. It's no surprise to see the markets go down as well. Now, the Russell 2000 has been holding up, and we've been seeing value holding up as a result of this rotation. So it's here to be seen if this is going to be a deeper rotation over the next couple of weeks, or if it's just going to be a short-term correction in the markets as well. Now, in terms of fiscal stimulus, we saw the chance for pre-election stimulus come near to zero over the past week, with the bill being struck down in the Senate. And the Republicans and Democrats are very far in terms of what their goals are for fiscal stimulus, with the Republicans only wanting a $500 billion bill, while Democrats are looking at a $2 trillion bill. So it's to be seen when we'll see a stimulus bill, but it's most likely going to be after the election itself. Now, moving on to monetary policy, the FOMC met this week, and what they said was that they would hold rates for the next 3.25 years while conducting $120 billion of quantitative easing. Now, some people think that this is not enough, but this provides a significant backstop to the markets. And if this amount of stimulus is not enough to help support the markets, it's going to be difficult to see how much the Fed can do to help support the markets if there's a further downtrend. And I'll actually share my screen right now with some key data points that I saw from the Fed's balance sheet as well. So if you can see from the balance sheet, we saw a slight contraction back in June to July, but now we're seeing a slight expansion over the past couple of months. So I expect this expansion to continue. One key data point that I'm looking at is in terms of continued stimulus is what we're seeing in terms of economic data. Over the past couple of months, we've been seeing manufacturing numbers and service numbers come higher than expected, which is showing the economy has been doing well, and the stimulus might not be as necessary. But what the major concern here is, we could see a slowdown if we don't see increased quantitative easing or increased stimulus as well. With the chances of fiscal stimulus decreasing significantly, we could potentially see a potential downtrend if we see changes in consumer sentiment, which has been very high as of recently. Now, moving on to things that I'm seeing in terms of US politics and how that relates to the markets itself. So the election is expected to be very close, and one thing that I've been looking at is looking into specific baskets for whether Biden wins or Trump wins. So if Biden wins, what I've been reading up on is the fact that we would see a lot of these sustainable energy and electric vehicle companies continue to rise up. The major reason for this is the government would be able to provide grants, subsidies, and also give tax benefits to many of these companies. And in terms of a Biden short play, that could potentially be the healthcare sector, as we could see increased regulation in that sector, and potentially many of these growth technology names as well, as we could see increased taxes on these corporations under a Biden win. Now, another topic of discussion has been potential civil unrest during the election phase, as with the election expected to be very close, it could take a couple months or even more to determine who the true who the true president is after the election, with many logistical issues pertaining to mail-in ballots. We could see potential civil unrest, and that could have major consequences for the markets themselves. But there is still time to tell if that is a realistic possibility. Now, moving on to some things I'm seeing in terms of the market itself. We've seen the dollar consolidate over the past couple of weeks, and one thing of note is the fact that the Federal Reserve will have to continue to print money as a result of our U.S. current account deficits. The deficit has widened by over 50%, which makes it so in terms of US dollar denominations, we'll have to print the most versus any other country. So what this means is we could see currencies such as the euro or the yen try to strengthen versus the dollar. So we could see a further downtrend in the dollar. It still is with it being consolidation, we'll have to see how that plays out. Last week after the ECB meeting, we saw the euro strengthen significantly. So we'll have to see if that trend can continue and what the implications of that is. A strong euro could mean that they have fewer exports. So that's something to look into, what the ECB does from there. Now, in terms of gold has been in a consolidation phase, just as like the dollar. So it's to be seen if we could see a rise up with further uncertainty in the markets. If we are seeing a continued correction, or if we're seeing potential issues in terms of civil unrest, if we see that it's hard to determine the election candidate, due to these specific mail-in ballots, we could see a rise up in gold. And with if we see the current account deficits continue to increase, we could that would be gold bullish, as we would see the dollar potentially fall. Now, something I'm looking into in terms of the VIX term structure is the fact that over the past week, we saw the markets move down, but we didn't see a significant move up in volatility itself. So one thing to note is in November, we're expected to see a higher volatility due to the election cycle. But can this continue with the VIX term structure ballooning out for the front-month dated contracts? Could we see a move down in products such as in the VIX or in ETFs that we are trading, such as UVXY? So that's something I've been keeping a look on. I know Ollie within our Discord, within our Eagle Investors Discord, has put out an SVXY play based off the fundamental notion that we might see the VIX term structure move down from here, with the spot price being so low and the front-month dated contracts being so high in terms of a proportion. Now, one potential trade that I've been looking into is natural gas. So there is a seasonality portion to natural gas. And something I've noticed is in terms of September. September typically points out to a bottom in natural gas. We could see a run up going into October and November. So in terms of the chart today, we saw we saw natural gas hit a low on September 17th, and it has risen up slightly since then. Now, a lot of this pertains to the weather itself, what the actual demand of natural gas is, and seeing the amount of storage as well. Now, we saw Hurricane Sally come in a few weeks ago, so we have to see the impact that has on storage itself, and if we could see either a lower demand as a result of that, or if we can still see demand go up from there, as well as supply being not significantly high. Now, moving on to some other trends I've been following in terms of COVID-related news, we didn't see major news in terms of vaccines, but we saw major news in terms of COVID cases. So COVID cases are rising throughout Europe and in particular in France. So that's something to look into if we could see another outbreak. I know that there are also talks about the fact that we could see we could potentially see a second outbreak in terms of cases as well in the United States, with it coming closer to winter. So that's something to keep an eye on if it has significant impacts on potential demand for oil, for example, or on the economy itself as well. Now, another thing that I'm looking into next week, with not too much economic data coming out, we should look into the PMIs that are coming out globally. The market PMI is expected to come out, so we can see if we're seeing a continued rebound in terms of economic data as well. And those are the major key things that I've been seeing in the markets. And if you're seeing anything in the market, feel free to leave a comment below. And if you want me to cover any specific topics, feel free to message me on Discord or leave a message in the comments below. If you're not part of the Eagle Investors Discord server already, make sure to click the link in the description to join. You can join completely for free and get and join a chat room of over 20,000 other traders, as well as get market updates and market trades as well. So we post options and stock trades, as well as different types of strategies, as well as education. So make sure to click the link. There's no credit card necessary to join, so you have nothing to lose. And make sure to subscribe and hit the notification bell to keep on getting videos like this. Thank you.